Hello traders, how are you? This is Wanjiru Gishangi of Forex Exploits Online Academy. How have you been? I hope you've been amazing, and I hope that your journey is becoming flawless as you keep learning, as you keep watching the videos, and I hope that they are having a positive impact in your trading journey. For this session today, we'll be talking about trend lines. Just like I promised on the last live session on the Forex Exploits online academy page on Facebook, I promised to do a video on trend lines, and this is what I'll be dealing with here. But as always, we start our videos from a beginner's perspective because I may not know at what point you are on your trading journey. So we go back to basics. What is a trend line? When you hear the name trend line, what comes into your mind? Now, a trend line is basically a line that you draw. You draw as a trader, you're the one responsible to drawing the trend line. Now, a trend line is a line joining two or more swing points on a single trend. I hope that you've had time to watch my market structure video, which I keep saying it's the most important thing that any trader needs to understand. You need to understand market structure no matter the strategy that you intend to use. So, just to mention, there are three trends. When we talk about trends, these are the same as the cycle, the direction, the flow, okay, the bias. All those names, they all go back to the trend. So there are three types of trends. We have the buying trend, the selling trend, and of course the sideways, or what we call the ranging trend. Now, as we have the trends, now the trends will dictate the type of trend line that you have. If you have a buying trend, then your trend line will be a buying trend line. This is what I'm saying. On a buying trend, we keep pushing higher and higher and higher. So when you go drawing your trend, you want your trend to touch at least 2 points. So you draw your trend. Oh, by now you of course know that I'm not really good with this drawing thing, but this is your trend line. Okay, let's make it a bit clear or a bit clean. Let me try. So you want your trend line to touch that point and the second point. Now that's a valid trend line. Then you can extend it to the future and see how many other taps you're going to get. So if it's going to qualify to be a buying trend, it has to touch first point, second point. Now the third point, the fourth point, the fifth point will show up later. But at least when you're drawing, you really have to have these 2 points. Very, very important. That is what makes it a valid trend line. Now, if you're on a selling cycle, now the market will be pushing lower. So you have a lower low, lower low, lower low, lower low. So now you want your trend line to at least touch 2 points. Oops. It's drawing. So you want your trend line to actually touch that and that. So that is a valid trend line. Now extend it to the future and it you have other taps. So you have tap 1 and tap 2. Okay. That's what makes a trend line valid when it has 2 swings. It has touched 2 swing points. You can actually watch the market structure video to identify the swing points and of course the best ones that you need to use when you're drawing your trend line. Then there's the range bound trend line. Let's say, remember the market is mostly on a range. So range will be the sideways movement. So you want to draw your trend line at the top and at the bottom. So the market will be pushing to that point, back to the other point, back. And if you're a technical trader, I am so sure that you're very excited seeing me draw this because this is what you commonly call resistance and this will be support. Okay, if you're a supply and demand trader, again, you're excited because this is your demand zone and this is your supply zone. If you're a pivot trader, of course, you're excited again, those are your pivots. So whichever name that you want to use, depending on the strategy that you're using, this is basically how you draw your three types of trends, or based on the trends. So the trend line. So we have the buying trend line, we have the selling trend line, and we have the range bound trend line. Now, in terms of types, now these are just names. The ones that I've explained are the different names given to the trend lines based on the trends. Now we have the types. We have the types. We have the types of trend line. We have the passive trend line. This is what I'm talking about, the types of trend lines. We have the passive trend lines, the aggressive trend lines, and the counter trend lines. Let me give you an example. Now, on this, let's start with this buying cycle. Let me clean up. Should I clean up? No, let me just use this. Now, the one that touches the outmost or the most external swing point is what we call the passive trend line. Remember or note, a trend can have so many trend lines inside of that trend. Okay, I'll show you, or you understand more when we get to an actual chart, but let me just explain. For passive trend lines is the one that touches the most external. Okay, the most external. We can say this is touching the most external because there is no market below these swing points. Then at some point, because the market does not actually just respect the straight one or the passive trend line, you may get that there are other micro movements here. Micro movements in that trend. And so if you draw another trend line in there, is what we call aggressive trend line. It's the closest. It's the closest. Before you get to the external swing points, there could be other micro swing points within the trend. And if you join two parts or two micro swing points in a trend, then you get what we call an aggressive trend line. You're going to understand that on a chart. Then we have what we call the counter trend lines. So now this is, let's use another one. Now this is a selling cycle. We're interested on the lower highs to give us the passive trend line. Then we have the micro lower highs to give us the aggressive trend lines. Now, remember on the selling cycle, we are having lower lows as our lowest point. So how do you tell that it's almost time for you to join the sell again? How do you tell that it's almost, let's say we have another lower low there. We have a microstructure. Okay, so we have this aggressive trend line. So how will you tell that it is time to join the sell? How will you tell? Which is the easiest way to tell it's easy? It's time to get into a sell. Let me clean that up so that it's not so messy. You draw a counter trend line on this move. It is the move. Remember, we're on the selling cycle. Please don't get confused. We are on a selling cycle. We're pushing down. So your interest will be to be a seller, but you do not know at what point the market now is ready to join any sell at these points, especially on the third touch and the fourth touch. So what do you need to do? You need to draw a counter trend line. So from this point here, you're going to draw a trend line back to the major trend line. It could be back to the passive trend line, or it could be back to the aggressive trend line. Now this move back is what we call the counter trend line. The counter trend line is supposed to give you entry, or it's supposed to tell you, now guess what, it's time to go back to the cycle. This is very, very important when you're doing the entries, and also for people who like doing counter trades. These counter trend lines are very, very important. So we'll deal with that when we get to an actual chart. The other thing to note is the rules. Remember, we usually say Forex is about rules. So if you don't know the rules of any strategy, then you're going to really mess up. So what are the rules used for using trend lines? Let's start with analysis. When you want to use trend lines for analysis, there are 4 rules that you need to know. 1, a trend line must touch a minimum of 2 points. I've already shown you that. So you need at least 2 points for it to be valid. Okay, that is rule number 1. It must touch at least 2 points to be valid. Then the higher time frame trend line always gets precedence in terms of validity. This is where we say the higher time frame rules, meaning a weekly trend line will be more stronger than a 1-hour trend line. A 4-hour trend line will be more stronger or more valid than a 30-minute trend line. That is very important. So always check on your higher time frame trend line first before you get to settle on a bias. Remember, the bias or the trend is usually stronger if it's analyzed or if the decision was made using the higher time frame. I also mentioned on how to do your time frame combination later on in the video. Rule number 3 is on break of trend line. The break should be made by a significant candlestick. This is very, very important. The break of the trend line, remember, the market will not move in one cycle only. At some point, this buying will break so that now we can have the selling cycle, and then we start drawing other trend lines to the bottom side. Now, this break here has to be from a significant candlestick. Okay, I'm not about to talk about the candlestick names and Bible and everything, no, but that candlestick must be significant. I'll discuss or maybe touch on it on a different video where we talk about the importance of different candlesticks. But today, let's just say this candlestick here must have the body, or the break must be from a body of a candlestick. Now back to basics. This is a candlestick. We have this is a tail, or what we call the wick. This is the body, and this is also the tail. Tail or wick, whatever you like, the name you like best. It's a tail or wick. You have the body, you have a tail wick. So that break must be the body of a candlestick. If it's a tail, then this is not a significant break, or that break is not real. It's just messing up with your mind. Also, this kind of candlestick here cannot give you a break. Okay, the candlestick has to have a body, but this is something we'll discuss on the beginner series course that I want to launch here. So this is a video on a different, this is something, a topic on a different video. Moving on, number 4, the counter trend line is drawn towards the major trend line and used for trade entry. I think I had mentioned that if you're drawing your trend line, your counter trend line, sorry, it must be towards the major trend line. Why that? Because we use the counter trend to do entry. Now, those are the rules when you're doing market analysis. So what are the rules when you want to use trend line for entry, for trend entry? So here we have the rules while using trend lines for entry. Remember, you can use a trend line for analysis on the higher time frame, and you can also use it on the lower time frame for entry. That is when you're combining the higher time frame analysis with the lower time frame entry. So rule number 1 for entry is on each touch of the major trend line. So let's say you have your first touch, then you have your second touch. Now, the highest trade you ever get is, of course, on the third touch. That is like a rule or something. This is usually the highest or the heaviest. That doesn't mean that there will not be other touches. Of course, after the third touch, you can also get the fourth touch, the fifth touch, depending with the time frame. Now, each touch of your trend line is an entry. Okay, so entry is on each touch of the major trend line. That's a guaranteed entry. As long as the trend line is not broken, then you know that is an entry towards the same trend or within the same trend. 2, during retracement, draw a counter trend line and enter with the break. So when you're drawing your counter, okay, so this could be, this is a reactive move, of course. So you have a counter trend line, you have the break here, This will be easier on a chart. You're going to see that. So you have the break. Now with this break of counter trend line, you get in. But now, mostly if you want to have a higher probability trade, remember Forex is about probability. So if you want to have a higher probability, you will not get in with the break. Okay, so you have that break with a very beautiful candlestick. You not do your entry here. What will you do? You wait for it to trap, come back again, now have what we call the retest. The retest. When that breaks, now you can get into your trade from there. And this trade is usually very, very heavy. When you have the break and the retest, so this was the break and this was the retest. If you have this kind of trade setup, is usually some nice payout. So always be keen. Now, this will not happen all the time. Now, this is the downside of trend lines. The break and retest will not happen all the time. For example, if the break is given by a fundamental event, you may find that this break here was a very huge candlestick. And guess what happens? The market never comes back in here and just continues. So it's you to decide. If there is no economic event, I usually wait for the retest myself, but it's you to decide if you're going to get into the first entry, suffer some drawdown. If you have a stable account, you can actually get in with the first. If there's a retest, you will be on some drawdown until the retest happens, and then you can maybe have another entry and continue. That way you will not miss any opportunity. But my advice would be only take the trades that are of very high probability, therefore wait for the retest. But again, that's your decision. Okay. The last one is on exit trades with the break of the trend. Yeah. If there's a break of the trend line, now exit your trade. For example, if you're on this buy and you find that it has broken at this point here, there's no point of holding any buys. So what do? This is a break with a significant candlestick. You wait for the retest, which is very important. And after you've waited for the retest, now start selling. If you're a swing trader, you can get into your trade with the retest and hold it. Hold that trade. Why? Because it has to come back to the mother point, or what we call the peak. This is just something I want to add in for swing traders so that it's relevant for everybody. If you're a swing trader, you get in here, you can throw your 0.01. If you're a swing trader, this is the very awesome. This lot size here is beautiful for a swing trader. One, it has no blood pressure. Okay, and if anything, if it goes against you, you will not lose as much. And if the market goes your way, then that's a good payout that is stress-free. So you can throw your 0.01. Of course, you can choose your own lot size, and then you can hold this market until it goes back to the peak. Remember, the peak can also be your zones, can also be your source and your pivot. So you can hold that. So there's a note. There's a note here, meaning a week does not give a valid break of a trend line. I think I had already mentioned that. So those are the basic rules that you need to have at the back of your mind when you're trading the trend line. So now let's get to the charts. Let's get to the charts and apply all that knowledge to an actual chart. But before then, remember, you can always contact me. You can always send me or my team your video request. You can either go to Facebook, find us on Forex Exploits Online Academy. It's a page. Therefore, you can send us a message, or you can WhatsApp the number on the page. We also have the group using the same name, the Forex Exploits group. This is where we talk about everything Forex. So you can either join the group. You can also get any of my ebooks. I have 6 books now. You're most welcome to get a copy of any of them, depending with your level of skill or whatever you're looking for in your trading journey. They are independent books, therefore you don't have to get the 6 of them. You can just pick the one that you feel suits your trading personality. And if you're not on social media, of course, you can find us on LinkedIn using the same name, Forex Exploits Online Academy. Again, you can send us a WhatsApp or you can send us a message. And if you're on YouTube, of course, you're on YouTube. If you're watching this video, you can watch my other videos on different topics. Be kind to share, be kind to subscribe, and don't forget to contact us and give us any feedback and also video request. If you're a beginner, if you're a total beginner and you encountered this video for the first time, this is the video that I wish you can start on. How to get started. It shows you how to start, how to set up your trading platform, and what the candlestick mean. But for every trader in here, this is the video that everybody needs to make familiar. Everybody needs the market structure video. Very, very important. So be very kind to watch this video. And if you're a block trader, this is a series. I'm still preparing the part 3 of the block series. If you're struggling with a strategy, you're in there, you do not know which strategy to pick. Remember, we have the stop hand strategy that works for everybody. Okay, this works for everybody. And if you're a technical trader and you want to use the TDI, this is your video. For the people who don't have capital, you're struggling with capital and you don't know which prop firm to use, this again is your video here. And for the fundamental traders, you can go through the card monetary policy report video as you prepare. We still have 2 more. By the time I'm recording this, we have 2 more card monetary policy reports to happen this year. Remember, you can still use the same strategy to trade other monetary policy or interest rate events. So it's not just about the card. You can watch this video and apply the knowledge on other events. Or alternatively, you can get ebook 6 if you're a fundamental trader, and all there is in that book is how to trade events. So that's how to contact us, and those are the videos that will make a difference in your trading journey. So let's get back to our trend line business. Now, trend lines, let's talk about the types depending on the trend. So this is a selling trend line. Why is it a selling trend line? Because it's on a selling cycle. What you need is to draw it from swing points. So from the beginning or from the peak, or where your chart or the trend is starting, pick a swing point, join with the second point, and then just let it flow. Then you're going to get a selling trend line. This is also an example of a selling trend line. Then we have the range. Let's say you encounter a range. Remember, a ranging market is where the market is just pushing up and down, zigzags. It's not having a really nice flow. So what you do, you just draw a trend line from the top side and another one to the bottom side. Now, there's a thing. If you're a beginner, how do you draw your trend line? This is where you draw your trend line. This is a trend line. So you just click on it and then you can draw. Now, let me start with how it's usually set up. So let me delete that. So when you click on trend line and you want to draw, it's extending to infinity. It's extending to the future. So you can actually edit that setting so that you can draw your own size. You don't have to have it extending it to infinity. Maybe you just want to have a short trend line. So what you do, you double click on it, right click, click on trend line properties, under parameters, and check this box. You can uncheck that. You can also change your color, the color of the trend line, to the color you wish by just clicking on style, and then you can choose your color and then you click OK. And then you have a shorter trend line. So when you want to draw, just draw that. If you make a mistake and you draw a trend that is not so straight, you have joints. See these joints? So what you need so that you can make it really flawless, double click and straighten it. When it's totally straight, there won't be any join. So that's just some basic way of drawing your trend line. So don't draw a trend line that has so many. See this? Okay, it's not really straight. So that's how to straighten your trend lines. Then we have what we call the buying, the buying trend line. Again, you'll be having a buying cycle, which will come from a peak. Okay, the buying cycle, you find out two points and then just extend it. So on the third point, you'll be touched, and if there's a break, you wait for break and the retest. You don't get into a sell just because the trend line has been broken. Remember, we said you wait for a retest. And this market is very, very organized. When we talk about organized, is if your trend line is right, the point at which it was broken by a significant, remember we said the break has to be a significant candlestick. You're going to wait for the retest on the same trend line. Remember, a tail or a wick does not break anything. So once there's a candlestick, the body of a candlestick closes below that trend line, then you know that the retest is set. And so you can now draw another trend line to the opposite side. The same thing here, you have this selling trend line. You wait for the break by a significant candlestick or the body of a candlestick. So before you get, this was selling, before you get to the buy, you need a retest. You need the market to come back and tap on that same trend line. And if there's a candlestick that actually closes above, then you know from there you're safe to get into the buying trend line or into the buying cycle. Okay, that's how you draw your setting cycle trend line, the range bound trend line, and of course the buying trend line. Now, we have the other types of trend lines, which we mentioned as the passive trend line, aggressive trend lines, and the counter trend lines. So let's have an example of that. Now, the passive trend line, I already mentioned, it's the one that will have the most external, the external market, the farthest swing points. So you have the peak or where the market is coming from, it has the second touch, and then you let it flow to the farthest end or to the most external market. That is what we call the passive trend line. Then we have the one that is closer for the microstructure. So inside that passive, you can also have other trend lines. So you have the one that is very close to the candlestick, or it's very close to the microstructure. It needs one point, the second point, then you let it flow. And then it will give you, of course, the third point, the retest back into the passive, and you continue. Now, the importance. Let me mention something very important about the aggressive trend line. The aggressive trend line will help you not to get trapped by this market that is retesting or touching the third point on your passive. Because this is where a lot of traders will be trapped on the wrong move. You see this move to the top side and you think that it's reversal because it has broken structure and retested. So you go in there very heavy because you think we are buying. But no, we are not. We're basically retesting our passive trend line. So very, very important. Have your aggressive trend line. When your aggressive trend line is broken by a significant candlestick, you wait for the retest. Now you can counter trend. Okay, you can counter trade. Trade back. But to what point? To the point where your passive trend line has a third touch. And remember, usually say the third touch of the passive trend line or any trend line is usually very heavy. And if you measure in terms of moves or pips, that is 405 pips. And what was the other move? The second touch. That was 426. That was also good. And what about the first touch? 178. So the third is usually very heavy. Also the second one, depending with the currency, but you actually do not wish to miss the third move. And this is where everybody now says, oh, the market has confirmed structure. So by the time this selling is happening, you're really not sure if it's happening, if your trend lines are not well done, but By the time it's here, you're like, oh, so it wasn't a buy, it's a sell. By the time you get in here, if you're late, then you'll be trapped selling down here while the market is actually changing. And now check this out. This aggressive line was broken. We have a retest. We get to the buy. Now this retest back, you can see that I've drawn another trend line. This trend line is what we call the counter trend line. It's for this counter trade. How will I know that I am no longer supposed to be counter trading? I am no longer supposed to be on this buy trade. It's by the break. It's by the break of this counter trend line. I hope I'm not losing anyone. So I'm going to make it simple for the last time. When you get to a chart, draw your passive trend line. The passive trend line will be the most external swing points. Then as the market goes, it's going to give you a microstructure, a structure that does not really touch your passive line as frequently as you'd wish. So what do? You draw another trend line that we call aggressive trend line. How to begin, where to start your trend, your aggressive, you just pick the corners of the first two candlesticks. The corners of the first two candlesticks and let it flow. You actually just touch the other points easily. Now, when your aggressive line is broken, don't get into a buy, wait for a retest, wait for it to tap again. And now from there, you draw your counter trend, because guess what? This is not reversal. We're just pushing back to the passive trend line. So you can either ignore this move or you can get into it guided by the counter trend line, and once it's broken, exit that trade. When it's broken again, the point at which it's broken, you want to wait for a retest. Wait for a retest along that passive line, and then you can get into the last move guided by the passive line. The counter trend is of course drawn back to the trend line, whether it's on the aggressive or whether it's on the passive. And even when you're having a range, you can be having a range, but this range is moving and creating higher highs, even though it's not like this. This is what we call the channel. Okay, it's like a channel. It's actually moving, even though not awesomely, but it's moving. So what you do, you can either ignore it. For me, I usually ignore it, because this channel or this wedge, okay, you can call it a channel or wedge, this is a setup for a sell trade. This is usually a setup for a sell trade. So what you do, you draw your trend line, then wait for a significant break. Can you see this candlestick? It broke to the bottom side. Now don't get into that sell. Don't get into that sell. Wait. On that same candlestick, there will be a retest. On that same candlestick, there will be a retest. If you're doing block trading with me, you definitely know that you pick a third of that candlestick where it was broken. You pick a third of that candlestick, and the market will trade back in after taking out liquidity. Very, very important. This liquidity must be taken out if you want to get into a trade. So don't get in here, don't get in here. This is liquidity. Wait for the market to trade back and you have a good trade. Again, you can find this. Same thing. It's broken by a significant candlestick. Don't get in. Wait for the retest. You can join. Okay, and if you're block trading, again, over that, get in. Okay, but let's not do the block trading on the trend line video, so that we don't get ourselves confused. So those are the types of aggressive trend line, passive trend line, and the counter trend line. Now let's get to analysis. Let's get to analysis. Now, the types of trend lines. Remember, trend line can work on all time frames. For example, you can have the weekly trend line. This is Euro USD weekly chart. We came from a buying trend. So we had a buying trend line that was broken by a significant candlestick to the bottom side. You wait for a retest. You wait for a retest. Market trading back. And then now you can get the setting trend line. So this is the weekly. If you're going to use the weekly, trend line, of course, you get in at every touch of that trend line. You can also use the daily. Okay, you go to your daily chart. Again, you draw from the peak or the source or the zone where you're coming from. Now you pick two. You need two. And something else that is important, there are people who draw their trend lines using the wicks, but for me, I want to use the real price. I want to use the real price. So what I do, I use the body of a candlestick. So I'll definitely or basically ignore the tails. But again, you can draw them in either way. But for me, I usually just use the true price, which is the candlestick body. So I use this corner to this corner. Those will be my two touch points, and then I'll wait for the market. Every time it touches my daily trend line, now I have a daily swing trade. You can also use it with the 4-hour. Now this is the same. So this is Australian Audi against USD. This is the daily. So we go to the 4-hour chart. Remember, the daily is showing a buying trend line. So you can also just change the time frame to the 4-hour. You see your buying trend line is there, the daily trend line. You can minimize the size. See how it touches the daily. Remember, this is the daily trend line. This is the daily trend line. So I've just gone to the 4-hour and check how it taps and just reacts to it. You see that? You can also go to the 1-hour. On the 1-hour now, you have more aggressive trend lines because you can have this aggressive trend line, break, back to the daily trend line, aggressive trend line, break. Now it's coming back to the daily. So it doesn't matter the time frame. So you can start from the highest, just label it. You can label this as the daily trend line. Daily. And now just be guided by the other daily trend line. Then you can be guided by the other aggressive trend lines. When there's a break, you know how to exit, because every time it touches your daily trend line, then it's pushing. This is what I'm saying in example purposes. Look at this cell here. It's on the 1-hour chart, right? We're on the 1-hour chart. So there was this selling stand or selling cycle on the 1-hour, but you know that the overall trend is the buy. Why? Because the daily trend line has not been violated. It has not been broken. So what do? You do the sell. You do the sell, but you exit. You exit when your 1-hour. Let me enlarge this just for those people. See this trend line is a valid 1-hour selling trend line. You get into this sell because you don't want to miss those small cycles. So you get into that. Then you get out when there is a significant break to the top side, but you do not join the buy at this point. No, you wait for the market to actually retest. And where will it be retesting? It will be retesting on your daily trend line. Okay, so there's a break and retest. Once there's a significant candlestick that closes above your trend line, now you can push up. Same thing here. Is this break? Now this is what I'm saying, the retest. I remember mentioning that the retest does not always happen immediately. Now see this must have been an economic event. Then there's this break. At this point, this is where you get the retest. Now the retest will not be down here. Why? Because the break was up here. Very, very important. You can actually see the break and retest notes on ebook 4, where we talk at pure institutional price action. I've really explained that there. Now, what about the lower time frame? How can you use the lower time frame? Now, if you go to the daily, you can draw your trend line like that. So note the daily is red. Okay, you can go to the 4-hour. 4-hour is still tapping in there. So for the 4-hour, you can have the aggressive trend line, but I would still prefer using the daily. Now, if you go to the lower time frame, which is the 30 minutes, what do you need to do on the 30 minutes? Remember, we're pushing up. So you can actually draw other trend lines every time your daily trend line is tapped. Now draw the lower time frame trend line, the green one here. Every time it's tapped, you know you have a trade. Every time it's it's touched, you know you have a trend. On the lower time frame, it may be violated. Your trend line will be violated, but that does not mean we are reversing to the sell. This is where I mentioned that the higher time frame trend line has more validity than the lower time frame trend line. This break here does not mean we are selling. Why? Look at where our daily trend line is at. We still buying. So this is where you just do your counter trend line, and every time the market pushes up, now you draw another trend line, and we are pushing up. You keep pushing up until the day your daily trend line will be violated. If you're using the daily, or if you're using your 4-hour chart or the 1-hour chart for analysis. Okay, so that is how to do your analysis. For entry, let me mention something about entry. On the lower time frame can be either 30 minutes, 15 minutes, or the 5 minutes. Let's say you're on a buying cycle. Your entries every day. Now this is the daily partition. How you do that, you just click on Control Y, then you have the daily per day. Okay, you divide the market every day. So if you're on a buying cycle, what will you be looking for every single day? The break of your counter trend line to the bottom side. The break, remember, we buy from the low. So when you're getting into a trade, you want the counter trend to the bottom side to be broken. When it's broken, you don't get in, you wait for the retest. You wait for the retest. And now at the retest, you want a green candlestick or a buying candlestick to actually close, okay, onto the other side. And then from there, you get into a buy. The second day, you have a counter trend line back to your lower time frame trend line. You wait for it to be broken. It can either give you a retest or not. Then the next day, when you're lucky to get a retest, get the trade. If you're not lucky for a retest now, you will not have trades every day. I think that is something that you know out of experience, that there are days the market will give you a setup, there are days that there will be no setup at all. Then we have this break counter trend, retest, get into the buy. The next day, break of counter trend, wait for retest, get into a buy. Break of counter trend, wait for a retest, get into a buy. Here there was no trade at all. At this part there was no trade at all. Why? You see this is a range, so you would have done the range based trend line, wait for the break, continue the buying. So that is how you do your trades on the lower time frame. I think I've explained a lot in terms of how to do your analysis using the trend, and of course how to do your entry. Now the exit, how to exit those trades is of course the break of your trend. Let's say you're trading on this time frame. So if you got into this retest, break of counter retest, you get into this trade it, you can either exit in 3 ways. One, if you meet your personal goals for this specific day, let's say your personal goals was 20 pips. Did it give us 20 pips? Let's see. It actually gave us 85.3 pips on that specific day. Now with 83.5, you could have had a personal target of 20 pips. So you earned your 20, you left. You earned your 40, you left. But there are people who want to push the market to the maximum. So what do? You can use your trend line. Once you get into your trade, have the corner of the first candlestick and the second candlestick, draw your trend line. When it's violated, or when there's a candlestick that closes below your trading trend line, this is a trading trend line, the trend line that is guiding your trade here. If it's broken by the body of a candlestick, now get out. Remember, a tail doesn't break it. It has to be the body of a candlestick. So this is where you sit on your hands so that you don't get out of a good trade. So wait for an actual candlestick to close below your trend line, and now you get out. That is the secondary one was personal target. 2, the break of your trend line. And of course, the third is just you hold it until this break of the actual, maybe the lower time frame trend line, or if you are swing trader, the higher time frame, or if you have catch up or what we call the 13 EMA. Okay, you can insert it through your indicators, trend. It's a trend indicator. So you go to trend, moving average, then you set it as 13. It's usually red. That's why it's called catch up. So when there is violation of catch up, you see, for a buy trade, the market should be above catch up. So you see where catch up has been violated to the bottom side. Now you can get out, but not everybody likes trading the indicator. So you can just keep your chart as clean as possible. So that's how to do your market analysis, and also how to get entry and also exit. So let me mention something back on the trend, the time frame combination. So here we'll do the analysis. So where do I write? Let me write somewhere clean here. So if you're going to use the daily for analysis, so we have the analysis. We have the analysis there, and we have the entry. So we have the analysis, time frame, and the entry. So if you're going to use the daily, the daily time frame for analysis, then you can use either H4 or the 4-hour or the 1 hour. Okay, so if you're going to use the daily for analysis, you can use the 4-hour or the 1 hour for entry. The 1 hour would be awesome. If you're going to use the 4-hour for analysis, then you can use the 1 hour, or the 30-minute for entry. If you're going to use the 1 hour for entry, going to use the 1 hour for entry, then you can use the 15 minutes, or the 5-minute for entry. Then if you're going to use the 30 minutes, which is actually the lowest I would recommend, the lowest I would recommend for analysis when you're using Trendline would be the 30 minutes. So here you can use either the 5-minute, or the best time frame to use with the 30-minute analysis, the entry would be the 1 minute. These are for those sniper trades. So this is the combination, or my recommendation when it comes to Trendline. If you're using the daily for analysis, you use the 4-hour chart or the 1 hour chart for entry. If you're using the 4-hour chart, you can use the 1 hour or the 30 minutes. If you're using the 1 hour, you can use the 15 minutes or the 5 minutes. If you're using the 30 minutes, which is actually my lowest time frame recommendation, if you're going to use your trend line, then you can use the 5 minutes or the 1 minute. Now with the 1 minute, it usually gives very, very awesome retest kind of trades, and your retest will be the sniper type of entries. Now for the swing traders, remember this is for the day traders, short-term trading, okay, 3-day swings kind. But let's say you want to really hold that trade for some serious time, maybe a month or 2, okay, or even 3, okay, depending, on a whole quarter. You could be using the weekly for analysis and the entry. Oops. can actually use the 4 hour, or you can use the daily. The daily, or use the daily or the 4 hour. Between the daily and the 4 hour for entry, I'll definitely pick the 4 hour. Okay, these are for the swing traders. Let me make this clear a bit. This is for swing. Okay, this specifically is for swing. This one here is for swing trading. Very, very important. But these others, you can use them for the short-term trading, the session trading, or the day trading. A note before I end the session, a note is that this trendline strategy can be used even with other tradable items. It's not just about currencies. You can use it with any tradable item. Like this is UK 100, it's an indices. You can still do the same thing. You can, okay, you can counter trend. It works for everything. It's not specific to currencies only. This is a strategy that you can use to trade. You can see that I'm drawing counter trends so that I can get awesome entries. And you can see that they are actually on point. Break, retest, break, retest, break, retest, break, retest, break, retest. And even from the beginning, we have a break and retest. Can you see how awesome? And if I want a passive trend line, I can just do that, or I can do one here. Okay, so it's not based on currencies only. And here we have a break and retest, break and retest. So it's not based on currencies only. You can use it to trade other tradable items. So thank you so much. That will be the end of this trendline video. I hope you find it awesome, and I hope that it helps your trading journey. Until the next video, this is Wanjiru Gishangi. I wish you the very, very best. Bye-bye.